good afternoon. This is Mr. Not Advice. It's Wednesday, August 12th, 2026, my end of the day update. And as always, this is for entertainment and education purposes only. Big fat snooze fest today. VIX tumbled to a 14 handle today, which is your year to date lows, which effectively signal there's absolutely no fear in the market. Call skews, however, are at multi year highs, which is there's a shit ton of greed in the market. This has probably been the fastest pivot away from the world is ending to everything is fine and dandy that I can remember. But equity strength is mixed today. Rate hike odds and bond yields fell today on a cooling CPI, along with slightly lower oil prices, pretty much flat. Uh, no serious escalation over in the Middle East, but equity desks today that said that the market was very quiet. Rate hike odds continue to drop from up almost at 80% now, below 38%, almost taking off the table a September rate hike and squarely putting it in a December rate hike. I don't think there's going to be any rate hike this year, and I've been very consistent in saying that. Overall, the looking at the CPI today, Goldman's take on it was, quote, there had been some concern heading into this morning's CPI reading as markets worried about the inflationary impact of still elevated energy prices from the Iran war and AI demand, and the potential that a higher inflation reading would prompt the Fed to tighten monetary policy. Remember, tighten is to raise rates. This morning's benign CPI reading should alleviate some of those concerns, at least in the near term, as we think the combined impact of tariffs, the war, and mismeasurement of AI effects is mostly what's keeping core PCE inflation above the Fed's 2% target. We expect this to keep the Fed on hold in September and ultimately through the end of the year, end quote. So nice to see Goldman's coming back around to my point of view. Not that I care, but again, I don't think there's going to be a rate hike. So looking at stocks, we had positive results and guidance from neo cloud providers, CoreWeave and NBIS, as well as a server maker. SMCI supported stocks overall today as positive results and commentary are boosting confidence in the durability of AI demand, even as the chatter on trade desks is a growing concern on these circular debt financing packages now that Morgan Stanley announced a $250 billion debt package to help fund AI hyperscaler build out. NASDAQ outperformed on a day with the Dow scraping along unchanged. Small caps staged a comeback, but that's primarily due to short squeezes. In the last few minutes of the day, saw some selling pressure push the Dow into the red today. As I said, we are at a year-to-date low on the VIX 14 handle, basically the lowest of the year. All at the same time, call skews are at multi-year highs. So what does that show you? Right here, what's the opposite of panic? Because we had a tremendous amount of puts going into previous to last week. And now we have, it's effectively the call put ratio or the put call skew is heavily to the call side. So greed is taken back over in the market. As I said in my first part of this, that we have flipped from the world is ending to everything is fine incredibly quickly. So right now there is and Goldman summed this up by saying the market has moved from elevated anxiety to effectively no panic at all. Goldman traders said today it was a very quiet day on the floor, a 3 out of 10. Market volumes were plus 8% versus yesterday. Hedge funds and long onlys were net buyers, with hedge funds buying in the 94th percentile earlier this morning, though that subsided very quickly. Goldman continues to note a divergence across software, with hedge funds better sellers of the group while long onlys are buying the weakness. Looking at the S&P 500, while the index was solidly green, the picture was not so good when you look at Brett. Mag 7 stocks continue to underperform the S&P 493. So this would support the thesis that there's a broadening out trade going on beyond just the Mag 7. Even though the AI versus S&P 500 index ratio continues to stay elevated, token spend continues to drop off a cliff. According to Spot Gamma, SPX positive gamma sits in a band from 7,500 to 7,700. So remember, between those ranges, rallies will be sold, dips will be bought. There will be very little extension. However, negative gamma appears below that 7,500 level. Expectation is with a swift move to 7,800, which would shift all eyes to the 8,000 strike only if tomorrow's PPI is calm. A number of other data points that could help propel the market higher, among them being retail buying has re-engaged. We have the return post-earnings season of corporate stock buybacks, as well as we had just had a de-risking event where margin balances at the institutional level were greatly reduced. So there's a lot of fuel if the S&P 500 can break above that 7 to 800 level. As I said, the Middle East oil picture, we had IEA cutting projection for 2026 global oil demand. And Trump also said today that oil disruption in the Hormuz could last as long as through 2027. As I have been pointing out, keep an eye on refined product prices, which after recently dipping are now starting to rise again. While it's not showing here, European natural gas is going to hit the EU very hard, which probably caused them to increase rates, sell more debt. And so, again, this is, in my mind, a continued foundation for the American excellence trade. Dollar today was pretty crazy with it plunging on the CPI, only then to ramp back up to pre-payroll levels. Gold extended its gains back up to the $4,400 level, trying to get through 4,500. So between 44 and 4,500, I expect a reversal because there has been really no catalyst for this strong move up. Bitcoin choppy again today, trading up to 64,500 before falling back to 63.5. My takeaway is that the market right now has become surprisingly very quiet, surprisingly very calm, with practically no fear out there of any drop in the market. So, I mean, we've got quite a range here. We'd have to sell off by about what 3% in order to get down to that 7,500 level on the SPX. However, it could happen because we also are not going to have continued good news coming out of earnings. With, I believe, one of the only few companies that's not reported is Nvidia, and of course, no matter what it is, they are going to say it looks very good. So I think there'll be continued support in the AI complex, and we probably see continued support in chips. But the market right now, what concerns me is there's very little put protection to the downside. So it's almost irresponsible calmness at this moment. Looking at it, a couple of the stocks that we wanted to get into, we wanted to get into PCT today, but this is the pre-market. This is the 5-minute candle chart at the open. So what we do is we have a specific buy level. We watch the overnight highs and lows. Then we watch the first period, anywhere from 5 to 20 minutes highs and lows. Our original break level was 748. And I have a rule that at the very least, if I want to follow through with a trade in the morning, it's got to be going in my direction. And as you can see, straight from the open, other than this initial spike up to 794, which tapped the 50-day moving average, by the way, it was pretty much strong selling all the way down. I do want to make a note here at the end of the day, this is a relative volume index. What this is showing is the volume spike on a 5-minute basis from a standard deviation standpoint. So we not only saw MACD selling right into the close, which helped drive the price down an additional 16 cents, we also had, relative to the rest of the day, very strong volume that initiated that selling into the close. Finishing up with PCT, you can see right here where it touched the 50-day moving average and then proceeded to go down. Now, this is a traditional bearish engulfing candle where the body covers the entire body the previous day. I'm a little stricter. I like to see the body cover the entire range, but traditionalists would say this is a bearish engulfing candle. We could see, yes, tomorrow a retest up here between 750 and let's call it 770, but this is a reversal candle. So I would expect that we are probably going to test down here in the $7 level. If that doesn't hold, we're going to get lower down to the 650 level. But what happened? We wanted to get in a trade. It broke my 748 level, right? 758 level right here. Wasn't able to hold that at the open, wasn't going in my direction, so we stayed off the trade. And in doing so, we saved ourselves a very cheap and fast stop. We make decisions on our trading based on the charts and the price action. until the very last minute. We truly I look at it like I must be forced into the trade. Other stocks, we are in COP, had a very nice day today, despite the fact that oil was slightly down to up. We're looking for the next move to be at this April 29th high, 128.28, which puts us into this gap. If we get into the gap, we're probably going to hit 130. My next scale will be at plus $6. I got into $4 into the Septembers. They're at 535 by 580, so call it 550. Not bad for a 2-day trade. I've already scaled once for plus 25%. My next scale will be at $6 for plus 50%, maybe tomorrow with a 50% gain. Then I'll be down to runners and we can let this thing just run. EOSE today had slightly than lower average volume today. And it also was sold today, although not as deeply as PCT. At one point, if we had closed above this high, this 442 level, I was looking to get long. I'm no longer looking to do that. Today's high was 445. My next price discovery is at 471. So somewhere between here, current price, and 471-ish, 472 is where I will look to get long on a swing trade. You can see that the way I trade is very methodical. I'm not going to jump in just because, oh, I think it's going to go higher, or, oh, geez, I think that we've hit the bottom. I literally wait until the very last moment for price to confirm for me. We are in a wheat trade, and we came out with a, I would say, slightly bullish for wheat price report today, with the overall stocks of wheat dropping slightly, but it wasn't enough to really gun the price up. I think our last wheat report was back here at the 710 area, and you can see what happened. It started this big move up. We're sort of in a similar pattern here, but we're not breaking out yet. So I'm going to watch this closely, but trend is our friend. Also, this has been trading between -1 standard deviation, this orange line, and +2. At the very least, I expect a reversion to the mean, which would put us up here around that 25 level. Other than that, not a hell of a lot to report. A very boring day today. And that was one of my members quipped that I could have done my end of the day report 2 hours before the close. And he's right. I could have. I'm going to try to get into a couple trades tomorrow. One of those trades is going to be SMCI. Had a very clean breakout today on strong earnings. Another trade I'll try to get into is Rigatoni, quantum computing company with a break above the 50-day average. Next price discovery levels all the way up here close to $20. And then the final one that I will be trying to get into in the morning is OSCR Health. OSCR Health coming off -2 SD, standard deviation. We've now reverted to the mean. The next push should be, or could be, all the way up here to 32.63. So I'll see if I can put a trade together there. We did take out the 50-day, so that's now going to act as support. Probably right about where I'll set my stop is below that 50-day, since it closely corresponds to this break level. So anyway, I hope you didn't fall asleep today. I hope you had a good day, and I will see all of you in the boardroom tomorrow.
We gon' make it out. It don't get no greater. Feel like I'm on fire. Feel like I'm Johnny Storm. Feel like I'm volatile, explosive. Get close enough, you notice your girl like out of character.